All right, folks. So in this lecture, I like to talk to you all about what is support, what is resistance, what are channels, and how you can use them to add to your technical analysis of a stock. All right. So a lot of people go into, drawing out support and resistance and thinking it's just, okay, these are just levels in the market that, price bounces off of or whatever. It's more so areas where value is being determined in the market, right? So if you look at, why we have these charts, why we study these charts, we're trying to find the price points where, it makes sense to either buy or sell, basically, right? So the ways we find value areas or value zones is by establishing these support and resistance levels, which really are indications of demand and supply, right? So I'll talk to you all about all this in this lecture. So let's get into it. So what is support and resistance? Well, support, we say, is like a price level that the market will fall to, but repeatedly move up from or bounce from, indicating a larger market demand zone or heavy buying interest. And resistance is a price level that the market price will rise to, but it will repeatedly move down from or get knocked down from. So that indicates there's a supply zone or heavy selling interest there. And that these two things tell us where our value areas in the market will be. And support and resistance can also be used to clue us into entry and exit points in trades, right? Along with other indicators. But I'm what I'm learning at this point is there's a theory in the market called auction market theory, and it says that basically states that you can think of these market opens and market closes as almost like auctions, right? They're auctioning a stock, and if you go to an auction, they got people selling cars or valuable things or whatever, and they say, hey, you're buying at 10,000, okay, 12,000, okay, 15, okay, 20, and they go up and up in price. That's with one seller and a bunch of buyers. But in this market, or in the stock market, there are a bunch of sellers and a bunch of buyers. And so it's like an open auction. And so you can see these kind of value areas showing us where the buyers and sellers are in each particular auction. But we'll get into that. So for now, we just need to know that when we hit these lines, and these are some support and resistance lines I've drawn up, it indicates either heavy buying interest or heavy selling interest at those areas because it keeps returning to those value areas, these lines or whatever. So, but let's delve a little further. So I also want to talk about channels. So what is a channel? It's basically like a moving support and resistance. So it's a slope support and resistance area. So it's a trending market. So the bottom is actually moving up and the top is moving up. And similarly, well, that's in the uptrend. And similarly, in a downward channel, the tops are moving down and the bottoms are moving down. So you get lower lows and lower highs. In an uptrend, you're going to get higher lows and higher highs. So supply and demand is moving with a trend, so to speak. And so they work in a similar way as support and resistance lines, which are just even horizontal lines. And these channel lines can also clue us into potential entry and exit points. So how to use support and resistance. So again, the most basic trading method is to buy near support in uptrends or chart patterns where prices are moving up, and to sell near resistance in downtrends and when chart patterns where prices are moving down. So we want to buy at the bottoms of the channels and sell at the top of channels. And we have other indicators that we use along with this, so that we're using our indicators confluently. And you'll hear me use that term a lot, or in conjunction. So using indicators in conjunction to tell us, okay, these multiple indicators are saying buy, or multiple indicators are saying sell. So I use them in conjunction with other indicators. But this is one of the most effective indicators I use, right? So drawing it up. So when we're drawing support resistance, the key here is to understand, again, what support and resistance stand for. Support is a demand zone. Resistance is a supply zone. We're finding areas of value such as, like I say, supply and demand zones. We're not just connecting some people will tell you, oh, connect all the peaks and connect all the valleys on the chart, line up a bunch of points, and if they all fit on that line, okay, that's a support or that's a resistance. You could do that, but we need to understand deeper what those signify. So learning how to draw support and resistance, it takes time, it's a skill, but practicing it day by day will help you refine the technique and become more effective as a trader, right? So resistance can become support, support can become resistance. Here's an example where on the left you can see we have a resistance that price is having a hard time breaking through. It breaks through finally, and then it later, toward the middle of the chart, becomes a support for a little bit, and then it dips below, shoots back up, and now once it's shot far enough past this resistance point, when it drops back down, now that resistance becomes a support. But again, the price is finding that as a value area or zone. It's a line that connects all the peaks and the valleys in the chart, the little points. 1, 2, 3, 4, 5, 6, 7 points, but it's not exactly. It doesn't have to be that exact price. That is just saying it's a price that price tends to hover around very tightly, right? How support can become resistance. Again, on the left we have this line here as a support. It bounces down, it comes back up. Bounces down, it says, okay, we're selling too much, we want to buy, we keep going up. Now it comes back down and it breaks through and says, okay, we're going to sell. And then it comes back and it becomes a resistance. And now it's bouncing on the other side of this line. And so at first it's holding the price up, and now the price is holding, or this area is holding the price down. So, but it keeps coming back to this value zone. So I find price areas or zones because I like auction theory and saying that there's buyers and sellers in this open market. And in each of these, if in each of these support resistance areas, you'll see that price will consolidate or bounce between a support and resistance, a tight level. So it'll go down, up, down, up, down, up in this little region. Maybe it's a small region of price, and that's where it's finding value. And then it'll break out of there and it'll consolidate somewhere else. And it'll break out of there and then consolidate again in the same value area here. So you have to kind of think, the market spends more time moving sideways or consolidating, as they say, bouncing between two price levels, than it really does trending. Markets don't trend forever. They trend for a shorter period of time, and then they find a value region, and they trend somewhere else, and they find a value region, and they move into these price areas or zones. That's kind of the way that, goods and services in an economy work, right? Maybe cans of soda are selling for $1 for a while, then they're $1.25, then they're $2. Now they're back to $1.50. Now they're back to $1. And they're finding these value areas. Same with stocks, right? So this is how I trade. I try to look for these price areas or zones where price can leave from and return to, leave from, et cetera, et cetera. And so here I've shown, this is an index, the Standard & Poor's 500 index ETF, SPY, as they call it, SPY. And this is, I believe, it's like a year-long period. It's a long period of time. And look at all the different value areas I found where price consolidates. And then it trends up and it consolidates. And it trends up, trends down, trends up again, and it consolidates. Trends up, consolidates, trends down, consolidates. And it finds these value areas. And if you can kind of predict, based on economics, based on the company's performance or index's performance, where it may go next, you can set up trades. A lot of people like to trade so if you look at these zones, if you trade at a supply zone or a resistance and you sell, it'll drop down. It'll tend to drop down, especially if different indicators are telling you that it'll do that. And you also know the economics behind it and the company performance behind it. Or if you find a low support area, you know that it's bouncing off of support. That's a demand area. And maybe the company's expected to do better. The economy's in a better situation. You can trade at the bottom of support, at the very brink of support, and trade up and sell at a resistance. So you can do this. And that's about entry and exit points, but it's good to know that demand areas or support areas are good places to buy, and that resistance areas or supply areas are good places to sell, right? So I might have picked up at the bottom of the demand area here, the support here on the far left, traded all the way up and sold at the top here where it's reaching a resistance or a supply level and made a nice profit. Or when it's at the very top of the supply area, that's at a maybe it's at an all-time high, say, the price is never going further than that. I might sell and then wait for it at the top of the supply area or the resistance, wait to it to fall back down to another value area, back to a demand zone, and, buy back. So that's when you short a stock. And we'll talk about all that. But that might be a good place to make some money if you're shorting the stock. We're expecting the price to go down. So there's good places to buy and good places to sell based on where value is headed. And it's good to understand when there's a resistance, price will probably go back down. When there's support, price will probably go back up. Supply and demand. The chart is basically showing you economics, right? So now I also use support and resistance and channels, which is moving support and resistance, with other technical indicators, right? So on this chart, we've got support, resistance, we've got channels here. We've got Bollinger Bands. Those are called Bollinger Bands, the little blue bands here. We've got an RSI indicator on the bottom, and we've got a MACD indicator on the bottom. And I'll show you guys how to put all those together, but I use this in conjunction. I don't necessarily just sell at a demand zone or at a support. I don't buy at a demand zone or at a support. I don't just necessarily sell at a supply zone or a resistance. There's more things. But I tend to buy at demand zones or supports, and I tend to sell at supply zones or resistances, right? And learning how to draw them, you do connect the peaks, but you've got to find, if I go back here, you've got to find where these zones are, where there's buyers and sellers, and they're bouncing between, deciding. And then they decide, it breaks out of that price area and goes to the next one. It breaks out of that price area and goes to the next one. You've got to find the consolidation points and find where the chart is going through, where it's going through these auction areas, where the buyers and sellers are fighting and moving up or down to the next value area or zone. So you can know where is price headed. And I found, my experience, typically if a price is consolidated and moves up, and it consolidates a little bit and moves up, but tends to keep breaking upward in the auctions, it's bullish market, right? It's uptrending. And if it keeps breaking out of these consolidations, moving down, breaking out of consolidation, moving down again, it tends to be a selling point or bearish market, and there's a downtrend. So I'm looking to sell, so reading the market itself is a helpful skill. And being able to draw support and demand and find these zones, I draw them with rectangles. And I start with drawing the lines, and then I, create these zones with rectangles, and I kind of study where price might go, where price might head. If it keeps bouncing past a certain area, it's probably a lot of buyers there. If it's bouncing down, if it's bouncing off of a support. And if there's a lot of bouncing up, it's bouncing off a resistance, there's a lot of sellers there, right? So it's all relative. You got to see where these values lie with each other. So that's why I draw them out over long periods of time so I can understand where value tends to head, right? And then another thing is if it spends more time at the top of a value zone, it's more likely to break through. If it spends more time at a demand zone, and it keeps hovering toward the bottom of a value area, it's more likely to move down. And the way someone described it to me is like, the way one of my mentors described it to me, it's like if someone keeps beating against a wall, it eventually breaks through. And if they beat on a wall, on a floor with a sledgehammer, it eventually breaks through that way. So if you keep hitting something repeatedly, it's going to break through. But again, you want to watch who's tending to win the battle in these consolidation areas, the buyers or the sellers, and where does it break through? Sometimes it'll break through and come back. Other times it'll break through to the bottom and come back up. Those are kind of like fake outs. And you can usually spot those because they'll tend to go up and then they'll curl back down pretty fast. If they break through and go up and consolidate again, that means buyers are tending to be in control. And if they break through to the bottom and consolidate for a while, it tends to mean that the sellers are in control. So keep that in mind when you're trading. But if you see a breakout and then it curls back down and goes back into the auction or value area, or if it breaks down really sharply and moves right back up, back into the value area, that's kind of a fake out. The market still wants to go to that value area. It hasn't fully made a trend in that direction that it broke out to. When you want to know if it fully broke out, it'll tend to stay up. it'll stay out of that value area to the next value area, right? So for me, support and resistance is probably my most effective tool in my arsenal in terms of technical analysis. As simple as it is, support and resistance lines are probably my most effective and easiest to understand indicator. I don't enter a trade unless I have established support and resistance areas or support and resistance lines drawn up, channels drawn up, and where value areas are established. That's how I trade. So now that you understand how support indicates a demand area where people are buying a lot of a stock, and resistance is a supply area where people are selling a lot of a stock, I want to get into some other technical indicators that you can use in conjunction or confluence with this indicator, support and resistance lines, to better help you with your technical analysis, and especially with entering and exiting trades. So I'll see you all in the lectures to come, but I hope you learned something from this, and make sure you study up on this and do some homework on this. I'll see you all in the next lectures. Take care.